Jordy, thanks very much for joining us from Amsterdam. Just give us your views on I suppose, the current market there in Dutch markets and also the outlook.
Looking back to last year, I think it has been, despite the COVID crisis, an excellent year for the Dutch investment market. The investment volume recorded was over 18 billion, which was definitely a decrease of approximately 10% compared to the year before, but still in a historical perspective, still a very, very high investment volume. If you break that down to sectors, there were some winning sectors and some losing sectors. First of all, to start with, the biggest winner is the logistics market. It was really booming. There's a lot of demand coming from investors for Dutch logistics. But I think the fundamentals of that market are really, really bright. Also on the back of the COVID, there was an enormous growth of e-commerce that really boosted demand. And demand going forward is looking good. So it looks like that logistics is a safe haven for investors. Also, talking about safe havens, the resi market performed really, really well with an investment volume of around 7 billion. The biggest sector in the Netherlands. We have a strong home market, but also we definitely saw a lot of inflow from European and US-based investors. Also, the outlook for this market is very bright. If you look at the occupier fundamentals, there is a housing shortage in the Netherlands. So on the back of that, investors are very, very interested in low-cost or medium-cost housing. If we look at the retail market, it surprisingly enough remained quite stable in terms of investment volume. If you break that market down in the various landscapes there was a lot of demand for convenience retail, supermarkets. We saw a very large portfolio deal of supermarkets, over 300 million, but also quite some demand for retail parks. The outlook for high street retail is less favorable, but I think with corrected pricing, we have seen that deals are possible because the location of the Dutch high street retail is good. There are enough options for alternative use, and we don't suffer from too many shopping centers in the Dutch retail market. Offices is actually lost the most. The investment volume went down by approximately 40%. But again, if you break that down, you cannot speak of one office market. We've seen that there's a really big demand for core products, so prime assets, prime locations with good tenancy. In fact, pricing has remained stable, maybe even some yield compression going on. On the other hand, we have seen that secondary assets in secondary locations or with a difficult tenancy schedule in terms of vacancy, short leases have been more difficult to finance. Also, the outlook in terms of keeping the cash flow on level or even increasing occupancy is a bit more cumbersome. And therefore, we've seen that the pricing shifted out and it did not lead to deals because the sellers haven't, in general, agreed to the adjusted pricing.
And Jordy, there's been quite a big focus in general on the sort of more alternative niche sectors, whether that's senior housing or data centers, life sciences, those kinds of areas. How do you see those sectors in terms of the outlook?
In general, I think these are sectors that have a good outlook in terms of occupier demand. Either that's because of trends within the real economy or because of demographic trends. Always have been a bit niche markets, but we gradually see that especially the healthcare market is becoming way more professional. And also investors are specialized funds to actually deploy capital in those markets. That really has grown to a professional market that will continue to do so. Same goes for data centers. There are some really big data centers in the Netherlands. It's a specialized product, but we definitely see a demand for that, like we also see for science-related parks or laboratory space. Investors have a growing appetite for those alternative assets because they are really fond of the outlook in the occupier markets of those particular sectors.
Great. Thanks very much for joining us, Jordy.
Thanks for having me.